All right, it's 8:05 in Malaysia and Singapore. So I'll start this session. Thank you to all the participants who are here, and I hope this will be an interesting session. Let's keep it a casual session where, of course, I already have 10 questions that you've submitted, and along the way, if you have more questions, feel free to add it in, and hopefully there'll be time to go through those questions, to go through those questions as well. Okay. Now, before we jump into the questions, maybe just a very quick introduction. I assume most of you are already familiar with us, but we do get people who join us in the webinars for the first time, or who heard of us only recently, or only from the webinar itself. So, Ethis is a crowdfunding company, a fintech company that focuses right now on crowdfunding. Of course, we have other plans as well in the future, but the core business model, the core expertise, and our track record and experience has been in crowdfunding, mainly investment crowdfunding, specifically property investment crowdfunding. And if you go even narrower than that, it is social impact or impact investment into social housing projects, development projects in Indonesia. Yeah, so the questions here are focused on that context, although there are some more general or wider questions. And I'll try to address and to address all the questions as best I can, and at the same time also try to give as much perspective and understanding beyond the questions, beyond only what the questions ask. Yeah. So again, I want to iterate that the objective of this session is for us to have more engagement, more communication, and more understanding with you. Because as a platform, our role is to facilitate what you want to do. Yeah, of course, we on one side we work with the project owners and the developers, and on the other side there's all of you who are the potential supporters and investors of the projects that are featured on our platform by our partners and our clients who are running these projects. All right. So yeah, that was the first slide. Yeah, so that's in a nutshell what Ethis is. And you can see from our logo, we have the word Ethis on all four sides, with convergence in the middle. And Ethis is a combination of two words. We are first and foremost ethical, meaning everything we do is driven by ethics, by morals, by principles. We are a signatory to the United Nations Global Compact, yeah, which outlines and highlights various different principles. And we are also Sharia compliant or in line with Islamic finance principles. So that's why we have Ethis, which is ethical and Islamic joined together. Of course, we are open and welcoming to people of all faiths, all backgrounds, all countries. I'm speaking right now live from Kuala Lumpur in Malaysia. Originally from Singapore, right now based here. And as you probably know, most of our projects are right now in Indonesia. All right, let's go to the first question. Very straightforward question. How does investment at Ethis work? Right. Now, if you go to ethis.co, you will actually see that there are four platforms, right? Ethis.co, we have four platforms. One is Global Sedekah, which is a charity platform that's pure one-way donation. Of course, you get updates and reports and so on. So here, we're not talking about that. We also have property crowdfunding, investment in Indonesia, in Dubai, and also equity crowdfunding in Malaysia. Right now, and for the past few years, our focus has been on property investing, property crowd investing in Indonesia, and soon we'll be launching other platforms in Dubai and in Malaysia. So today I'll focus, of course, on what's available, on what's running, which is our Indonesian property projects, mostly social housing projects. Now these projects, again, if you go to our platform and you click on property in Indonesia, you will go to the page where we have the platform, the Indonesian platform, where we have all our projects listed and featured there. Right now, we do not have any live projects Uh, Fortunately, the recent projects were funded very quickly, and we have a thorough process of screening and verification on the ground before we allow our project partners to feature their projects. So the recent projects that came to us, because of our due diligence process on the ground, it has taken a week or so for some of them to get approved. Yeah, in the next 1 week, we will have a very interesting project coming up. Should be in the next few days, early in the week, as soon as all the screening and onboarding process is completed. And thereafter, we are aggressively scaling up the number of projects so that we'll always have projects open for you. Yeah, as a platform, we have to balance both sides, to match the expectations of our clients who are raising funds, as well as you, all of you, the crowd, our investors, so that you have projects that you can invest in. Yeah, so upcoming project will be here very soon. So keep track of it and watch out for our email. So when that project is made available, how does the investment work? Right? It's very straightforward. As a platform, our role is to provide you with the information you need so that you can make an informed decision when you make your decision to invest in the project. All right. And there's been a lot of interest, and so far we've done well over 1,000 investments from the crowd. And how it works is essentially you go to the platform first. You need to sign up. You need to sign in. Yeah, set up an account. From there, you can access all the information. You can view it online or you can download it. And once you are interested or once you are keen and confirm that you want to make an investment, then you just click on the pledge or the submit interest button. And just click on the button. And from there, we will receive your interest. Yeah. So then the process kicks in, and we have a team to help you with that process. All of it is automated. You'll get an email notification with the steps required. At the same time, we will also have people reaching out to you directly, just so that it is clearer and easier for you in case you need some guidance. Yeah. So as soon as you get the email, you transfer the funds directly to the Indonesian bank account, which is the project bank account. And then from there, you have your agreement sent to you. Once the money that you've transferred hits the account in Indonesia, so that same amount will be reflected in your contract. The contract will be sent to you, and you sign it online using e-signing, and it's done. Yeah, so it's quite straightforward. Just a few steps. At this point, some investors have asked, can we just transact and make the payment directly on your platform? Now, in the current circumstance, based on available technologies and based on the fact that we get investments from about 60 countries into Indonesia, there's no way to do that seamlessly on platform. So in our email, we will give you some instructions, and typically investors will transfer either from bank to bank, or you transfer through online remittance companies, or through physical remittance companies sometimes. Yeah. So that is, I guess, the main step that you'll need to make, and everything else is online, right? Now, compare this to if you really were to do it yourself and you want to invest in a country like Indonesia, then the process can be very tedious. It typically takes a few months. You'll have to go there physically. You want to meet the people there. You want to understand what's going on. You need to have maybe a translator and all that. Yeah, so that's what our role is as a platform, to receive the information, right, from the developers, to screen them based on our standards, and then to present to you the findings so that you skip all of that hassle. And all you need to do is to make your decision, make the transfer, sign the contract, and it's done. In terms of minimum amount and duration, typically the minimum amount is 500 Singapore dollars for first timer, which is about 350, 360 US dollars. And the duration depends on the project. As a platform, our role is to match you to the project, and this happens on a by project basis, right? So you do not put the money in a fund or in a financial instrument that gives you a fixed term. What happens is that the project comes to us, and we present the information to you after we verify it. So every project is different. However, I'm sure if you look at the projects, you will notice that most of our projects on featured on our platform last about 11, 12, 13 months, sometimes up to 15 months, right? So bear in mind, again, I want to reiterate this point, it's very important. You are investing directly in the project. That is the beauty of crowdfunding. We match you to real world projects. We are not a financial intermediary, we are a matchmaker, right? And so your money goes into the project, your money is used to develop houses, or your money is used for various aspects of property construction and development. And upon sale of units or upon a certain milestone being reached, then funds or revenue is generated in the project, and the funds are then calculated and transferred to the investors all around the world who invested via our platform. Okay, so I hope this is clear for the first question. I'll move on. Why Indonesia only isn't Ethis a Singaporean company? All right. Now, I would say right now, Ethis is no longer a Singaporean company. We started in Singapore. I'm Singaporean. Right now, we are a global company. Yeah, so we've expanded out of Singapore. And some of you may know, recently we obtained a local license in Indonesia, which has helped a lot. And we expect for it to bring a lot of value to all of you investors. Because with the local license, we work directly with the government, directly with stakeholders, and that helps to facilitate investment from overseas. Yeah, in the past, we were a Singapore company bringing funds to Indonesia. Right now, we are licensed directly, locally in the countries where we operate, which is currently Indonesia, coming soon Dubai and Malaysia. Yeah. So why Indonesia only? Well, I think I just sort of tackled that point. We will be expanding to other countries. We will be offering projects from project owners from Malaysia as well as from Dubai. Yeah, but maybe the answer would be what's special about the question. A better question maybe would be what's special about Indonesia? Why did we start with Indonesia? And to be frank with you, Indonesia will continue to be our core market, our core focus for a long, long time, right? And to expand on this question is why social housing in Indonesia? Yeah, so firstly, if you were to do some research, some quick research on your own online, to look for reports on Indonesia as a country, as an economy, Indonesia is one of the hottest, fastest growing, and yet stable emerging markets in the world today. Yeah, Indonesia is growing fast. Indonesia is growing strong. Politics is stable. Economy is stable, and the population is incredibly huge, which is part of the reason why the country has been stable. The country has not gotten into a recession since 1998. Since then, there have been various global recessions, but Indonesia has remained strong and stable. Yeah, so that's fundamentally all these basics are strong in Indonesia. And beyond that, why social housing? Now, as you may have seen on the website, on our platform, it is what we do is we facilitate your investment, we match it to social housing development projects. And not all, but a bulk of them are part of a government supported program where the government targets to make 1 million houses a year. This is to cover or to clear a shortfall, a deficit of more than 10 million houses that are needed in Indonesia. Indonesia has a population of almost 300 million people. So about 1 million houses, 10 million houses are needed for the segment, the lower income segment. Lower income segment that's also having a stable income. Yeah, so they can afford to buy a low cost house, right? So we come in or you come in through the platform into these projects. What's the benefit of these projects is because it's supported by the government. The government incentivizes or gives incentives and subsidies to the bank to provide financing to these low income home buyers, and so the risk becomes lower. Yeah. And another very important point to note is that because it's a government program, the pricing of these houses is fixed. The process is fixed. Everything, a lot of variables become fixed, and so it's much easier for us to screen and verify what's happening on the ground before that information goes to you and you make your decision to invest. Question 3. How do we ensure Sharia compliance? All right. Sharia compliance, and I mean, for on a wider level, general ethics. Let me try and relate the two first. Yeah. So Sharia compliance is based on principles of Islamic finance, which is based on Islamic law. And I would say that these principles are universal ethics. Is based on concepts that everyone subscribes to, justice, transparency, being fair to both parties. Yeah, that's very important. So Sharia compliance here, and typically in the modern world, is one of the main applications or one of the main circumstances where Islamic Sharia compliance is important is when financing something, typically you have the element of interest. Yeah, and interest is deemed to be not compliant because it creates a situation where one party takes all the risk and the other party, the financing party, the guys with the money, are not taking any risk. And that situation has caused a lot of problems in the model financial system, um, even leading to things like recession in the past and all the issues that we face with the banking system today. So Sharia compliance in this case applies to the form of the financing or how profits are made. And profits are made in two ways. One is through trading, when you buy and sell the house. Yeah, one of our more common structures is called istisna, which is essentially construction financing. So you, the crowd, will invest as a group to purchase units before the units are completed, and then from there we give, and that payment is given in stages based on progress. And at the end of the successful construction of the unit, then that unit is sold to the end buyer through bank financing, Islamic bank financing, and the profits made in that transaction is then shared with the crowd. So technically, that is trading. We also have musharaka, which is joint venture arrangement or joint operation agreement, where the crowd is entitled to a share of profits. Yeah, so these are the two more common approaches that we have, right? Buying and selling houses before they are sold to the end buyer, right? That means between the crowd and the developer, and then later to the homeowner. And the second one is profit sharing with the developer. Now, since the prices are known and since the prices are fixed by the government, typically there's not much variance or much difference in the projected returns and the actual returns. Yeah. What does vary is the time frame of the investment, because that is not within the control of the financer and sometimes not fully within the control of the developer as well. So how do we ensure that these technical aspects of Sharia compliance is upheld? Well, we have our in-house Sharia team. We have two individuals in-house who are certified and trained. One is a Sharia auditor under AOFI standards, which is a global standard for Islamic finance. And he has a junior team member who assists in the process, who's also legally trained. Yeah, so that's how we ensure Sharia compliance for all our investments. Beyond compliance, we also try to adhere to the spirit of Sharia, which is justice, equality, and impact. And we want to uplift humanity. We want to uplift these low-income individuals. It is very clear that when individuals do not have a home, when families do not have a home, that there's a lot of instability and problems that are created. Many research, a lot of research has gone into this, and I think it's a logical, something that's logically understood by all of us as well. So providing homes for low income not only gives them an asset for the future, it gives them a roof over their heads. It helps to stabilize and balance the family. It helps in their mindset and their mentality, so they become more confident. And from there, inshallah, they can break out of the poverty cycle. Oh, yeah, I answered question 4. So I'll touch on this a little bit more. So the translation into social impact in this specific case of social housing is because of providing houses for the poor. Now let me give you some context. Before they get these houses or before they purchase these houses that you funded through our platform, what was their circumstance? What was their situation? Now, typically, maybe try to imagine, right? Try to stay with me. These are low-income households that earn about 300 to 500 US dollars a month. Yeah? Typically, there's two breadwinners or an average one and a half breadwinners in the house. Right? The husband and maybe the son, sometimes the wife, sometimes an uncle. Yeah, so people in the household, there's one or two people who earn an income, and they earn from, as I said just now, $300 to $500, sometimes even less. Yeah? So that is their income, and these people, usually the communities that buy the houses that you invest in, work in they live in a village, and in that village there's a few big companies or a few big factories where thousands or tens of thousands of people are employed. Yeah, so essentially they're usually industrial workers or factory workers, good stable work but low income. And they're not able to break out of the cycle, and what happens to the next generation depends a lot on how well they're able to save for the education of their children. So in our case, in this case, when you invest in our projects, your funds go into building houses for them. Most of these people currently, before they get their first house, which you will provide, they live in rented rooms. And there's usually a big shortage of houses, and they can't afford to rent a whole house anyway. So what they do is typically two options or three options. They will rent a room in somebody else's house in the same area. Secondly, they live in somewhat a temporary kind of housing, which is not safe, which is not sanitary, which is not good or proper. And sometimes they live with friends and family. Yeah. So in all three circumstances and situations, it's not good for them. It's not a healthy environment. There are social problems and health problems. So, and even when they do rent a room, it can cost about 100 US dollars for them to rent a room because there's so many people looking for houses. Now, when they get the houses that we built with your support, your investment goes to building houses, and the project owners that are listed on our platform then sells these houses on your behalf to these low-income families. Here, they will pay even less than what they usually pay for renting a room. Yeah, so they buy a house, they get a house, they have a subsidy in the financing from the government, and from there they only pay 1% upfront, and the rest they pay over time. Yeah. So one house is usually sold at 8 to 10,000 US dollars. Right. So 1% upfront is $80, and from there they pay 70, 80, sometimes $90 a month, depending on how long the term is and so on. And they own a house, right? So in all aspects of their life, there's improvement from sanitation and cleanliness, which affects healthcare, to security, to stability, to a good family environment, to a good community around them, who are all from the same, usually from the same factory or from the same factories in the area, right? So this social impact is very high and very strong. You can check out the SROI page that we have on our platform, which explains this in more detail. All right. So to summarize, your investment helps build houses. You do make a profit. It's an impact investment, right? Because you're doing a commercial activity, but it's a commercial activity that builds houses for low-income families, for them to turn their life around. Okay, very interesting question. Some of you, most of you, I assume, would understand REITs, real estate investment trust. REITs are common in some countries, not so common in others. And a REIT is essentially where real estate assets or property assets are listed. And from there, individuals, smaller investors can also buy shares or have fractional ownership of this real estate. And the REIT model basically gives income to the owners of the REIT, right, or to the subscribers of the REIT. So that is what REITs is all about. Now, for Ethis property investment in Indonesia and in future in Dubai, you are not investing in buying rental income. You are rental properties. You're not investing to get rental income. You're investing in property development, and then that property is constructed or developed and sold, and from the sale there's revenue, and from the revenue there's profit, which is then given back to you. All right, so it is investing in two different types of property investment. what the crowd does through the platform is investing in property development, right? So REIT is something similar to if you were to buy, usually a REIT would be industrial property, right? So if you had significant funds, you could buy a warehouse and then earn from the rental of the warehouse. REIT helps to bring a few warehouses together, and then people can come buy in to buy a fraction of that, right? So I'm just reiterating to make sure you understand the difference. And the nature of both types of property investment are different. For REIT, a lot depends on the buy price, a lot depends on the market, and a lot depends on the rental. All right. So if you get a good price, if you get a good manager, if you get a good deal, and from there the rental returns are good, then every month you have good dividends from REITs. Yeah, whereas for Ethis, you are doing property development basically as a business, and the investment is in the property development project itself, meaning your investment is with the business that is running the development, the developer and the contractor. Yeah, so it's like business financing technically, but at the same time, because it's profit and because it's property, you have asset backing your investment. Yeah, so that reduces the downside risk. So this relates related to my earlier point on minimizing risk. Our job as a platform is to screen and to curate the deals based on a set method that we have developed over time. Your role as an investor is to read the information and to decide on whether and how much investment you want to make. All right. So we are not mitigating the risk on your behalf. You are still taking the full risk. We are not able to take the risk away from you, but we help to minimize the risk through our screening, onboarding, and verification process. All right. So what we have is we have a checklist, we have a system based on our 5 years of experience doing this business in Indonesia, and from there we structure the projects. So I would say the main key factor typically is to ensure that there is asset that is collateralized or that can be collateralized and made available in the event of worst case scenario if the project were to go bad, right? We always, when you invest, you always have to look at the worst case scenario. So in a worst case scenario situation, in a property development project, if something goes wrong, when you invest in the developer and something happens to the developer or something happens to the project, what then happens to your investment? So here is where this is the beauty of investing in property as a business and not other businesses. Typically, when you invest in normal businesses, normal SMEs, there may not be enough assets, physical assets, to cover your capital, right? Because typically you're giving working capital for them to run the operations. Now, in this case, in the cases of the property developments that you invest in on our platform, there is the land and there are the units that are a form of collateral. These are real assets, physical assets. If something does go very wrong, if it goes to the worst case scenario, then on the ground in Indonesia, we will work with you to appoint lawyers to work with the banks, typically the bank is involved, as well as with the government to recover those assets and sometimes even take over the entire project. Now, in our history, we've done about 50 projects. There has been one instance where we've had to do this, and that was because the developer had problems with his own cash flow, right? So he had other projects which was stuck or for whatever reason had problems, and so he then started to go in breach of the agreement he had with the investors. So what Ethis in Indonesia, PT Ethis, our sister entity over there, what was done was this tested the system, this tested the worst case scenario because the worst case scenario happened. So it took a long time. That's something I have to state. It is a process that can be done and has been done, but it takes a long time. Yeah. So the stakeholders were brought together, the project owners, the financing bank, and the government office of the region and we sat down and discussed, and from there the steps were taken to take over the assets of the project. They were put up as collateral, and eventually even to take over the entire project. So that was successfully done. It took some time. It took close to a year to get this to be done. Main point is it's done in the end, and from there the project continued. All right. So that is the baseline worst case scenario typically when you invest in a property project. Now, other than that, what we do is we also look at on the ground in Indonesia. Our team looks at the project in terms of the data, the financial data, the business data, the market data, right, of that location and so on. Our team in Indonesia also goes for physical site visits to verify that everything that is represented to us is true. We also meet the stakeholders of the project, who are typically the banks and who are also typically the regional government office, right? Now, so that's what is done on the ground as part of the screening and onboarding process. Now, another layer that we added on recently, about 6 months ago, is that we used to get a lot of submissions for project financing, and it was difficult to really identify. I mean, not difficult in the sense of not being able to do so, but it's a tedious process. It takes time and effort and resources to screen everything that comes to us. So what we did was we started to work with two types of partners for project origination. One is with the banks themselves, the Islamic banks who provide the mortgage. They also sometimes provide construction finance, and they would refer their developer clients to us after they've already onboarded those clients, if those clients need more investment. All right. So working with the bank, make sure that we get good quality projects, because the bank has already approved them before that, and these clients basically the bank's clients need more money, so they come to our platform and we screen them, and typically the projects are of higher quality than random projects coming to us. Now, secondly, we also work with developer associations and organizations. I believe we have three, and just recently we signed on a fourth one. So these associations have between 100 to 300 developers in every group, in every association, and they do pre-screening of the projects from their members before it comes to us. So once it comes to us, there's already a certain level of screening and verification, similar like what happens with the banks. So that makes our screening process much easier and faster. At the same time, especially for the developer groups, there's also pressure from the group to make sure that the developer performs, because the performance of one developer will reflect on the entire group and will affect the chances of other developers within the organization to get more financing in future from the Ethis crowd, right? So these are a few ways in which we minimize the risk. I'll recap. There's asset backing. So in the very, very worst case scenario, which has happened before once, we can recoup and recover through the collateral. Secondly, our team does physical verification. It does financial and business due diligence based on our standards. And lastly, we work with origination partners, which are the Islamic banks and also developer associations. All right. So because of this, risks are very much minimized, but I have to repeat that you are taking the full risk of investing in a project. You are not putting your money in a fund or in a bank where you can withdraw whenever you want to. You are investing directly in the project, and that's why the returns are typically above market compared to what you can get elsewhere. Maybe an analogy or something similar would be like investing in the stock market. You're investing in real companies. If their shares go up, their shares go up. If it goes down, then you have to bear that hit. In this case, it's investing in property development projects. Yeah. Is there a guarantee of return? Of course, there isn't. Yeah, and I already covered the second question in my earlier answer. So I hope that's clear for all of you. Please feel free to ask questions. You can just chat and add in those questions, and we'll try to address them later on. How does Ethis derive projected returns from the profit sharing ratio? Any possibility of the return being lower than stated? All right, it's a good question, a little bit technical. Now, in the projects that we do, typically we structure two types of projects. One is buying and selling, where the return is quite stable or quite fixed because we have already set in advance the crowd's buy price, buying the unfinished units from the developers, and the sell price, which is fixed by the government, selling to the end buyers. So the difference between that is the profit. All right. Then we also have the joint venture approach or musharaka approach, where it's based on profit sharing. So there's a ratio for that profit to be shared. Now, this is based on how we derive this or how we arrive at this ratio is by discussing and negotiating with the developer. Typically, if we identify that the project is of a lower risk, much more matured or stable, and the developer has very strong track record, then typically we're able to get a smaller sharing ratio, which equates to a smaller return. So the developer also knows his own strength. And for projects that are not as strong, then the returns can be slightly higher, right? So risk and return are trade-offs, but typically because all our projects go through similar screening, a similar onboarding process, as I mentioned earlier, there are certain risk mitigation or risk reduction factors that have been taken into account, right? So in a nutshell, to answer this question, it's based on negotiating with the developer to get the maximum profits that will make sense to them and also be enough to attract investors. It can seem to be quite high, actually. The cost of capital from the financing from the crowd is considered high, higher than what they get from the banks and so on. The benefit to them is that basically the speed of investment is much faster. Bank takes 6 to 9 months to process and disburse the funds, whereas from the crowd it takes maybe 2 months or 3 months for everything to happen. Sometimes even less than a month when things go very fast. Yeah. So that's the first thing. That's the first key factor, and it's a very important factor because for property developers, their returns are a function of time. The faster the project moves, the faster they get their sales done, and the faster they can move on to another project. Yeah, so speed is very important. Now, secondly, why they're able to give such high returns is also because the funds that we provide are typically at the bridging phase or at the initial phase. And because of that, and typically it's about 5 or 10% of the entire project. So the developer may be making 30% profit on the entire project, and most of that funds goes to him. And a lot of the funding or capital required for the entire project is from the sales of the units as the project continues over 2 years or 2.5 years. Right. So we come in for 1 year in and out with a small portion. Your investment, your capital is a small portion of the project, and they are happy to provide higher returns for that portion of capital because they make money, they make their profits from the rest of the project. So your capital helps speed up the project, helps them reach a more advanced stage of the project, and then they make their money at the end, right? Any possibility of the return being lower than stated, typically the variation will be very minimal. Yeah, there is the possibility, of course, but especially for istisna, where the buy and sell price is clear, is known, it is more or less, it generally won't change. However, there are two factors to take note of. One is currency. There's a question on that later on. I will address that later. But basically, currency can affect your currency depreciation, can affect your returns. Secondly, it's about the time frame. So the return on an absolute figure, let's say is 15%, or let's say it's 12%, you will still get your 12% usually, but if the time frame changes, then your annualized calculation changes, right? If you get 12% in 12 months, then annualized is 12%. If you get 12% in 10 months, then your annualized is about 13, 14%. If you get 12%, the same 12%, same project, but it takes 15 months, then your annualized return goes down to 9 point something, right? So the returns are the same, but the time frame can vary. All right, please demonstrate. I'm on to number 7. I think I'm making good time. I got to speed up a little bit to answer the 3 remaining questions. Profit calculations after the expenses with an assumed investment of $5,000. All right. Now for this, I'd rather you go to our platform, you go to a campaign, and there's a calculator there. The calculator will show you how the numbers, the outcome of the numbers, right? But I'll try and summarize without that, without, I can't demonstrate through this slide. Yeah, but basically, when you invest $5,000, right, whichever part of the world you're investing from, first, when you transfer your money to Indonesia, there is usually some small currency loss. Let's say 0.5%, or something like that. Your bank may ask you to pay $10 or $5 or something as the cost, right? Because what goes into your contract is the amount that's received in the bank account in Indonesia. Okay, so let's say $5,000, the whole amount reaches Indonesia, and the project after a period of a year makes, let's say 10% for easy calculation. So it's $5,500, right? So you get $5,500 at the end of the project. However, there is an additional fee at the end of the project that Ethis as a platform charges. And I think this fee is important because it helps to align both sides. The fee is 12.5% of your profit, right? So the profit component, which is $500, a 12.5% fee is charged on that, right? So if my math is correct, let's say it's $60. $60 goes to Ethis from your $5,000. So you're left with 4,900 and sorry, 440 dollars. You get back $5,440. All right. So I hope that's clear. Maybe next time I'll get illustration to be put in. But like I said, you can just go to our platform, go to the campaign, and there's a calculator there that can help you to visualize everything that I just said. All right. I think I saw that you can give profit up to 20% for investments. Wow, that's quite amazing. If this is true, are you able to distribute it each year, or at least admit it as a debt to the investors? All right. So this is a real question from one of you. And there's some misconceptions here. So yeah, if you look at the platform, it's going to be 12, 13, 14%, sometimes 15%. For those who invest larger amounts, we do negotiate with the developer to provide larger returns as well. Yeah. So, but however, at the end of the day, it's not going to be more than 14 or 15%. So 20% is highly unlikely. I mean, just my personal point of view, which I assume you would probably agree with, any investment that can give you 20%, you have to take it with a pinch of salt, and you really have to do your checking to see whether it's real, because it sounds too good to be true. And when something sounds too good to be true, it typically isn't, or there's some catch attached to it. Yeah. So our returns that are provided by the project owners on our platform is typically 12 to 15% on a project basis for roughly 1 year, 12, 13 months, 14 months project, right? And your money comes in and your money goes into the project. Your money is utilized by the project owner to build the houses or to progress the project, right? To pay for permits or to buy bricks or to buy cement or whatever, right? It goes into the project. The money is not stored by us. We are just the platform. The money is no longer available because it's used in the project. Yeah. So what happens then is that the money that you invest, the capital, creates value in the project. It helps the project to be completed. The project is sold, and that revenue that is realized at that point in time is what it then becomes your profit and is distributed to you, right? So it's not, there's no debt created at the end of a year and things like that. So this question is a good question, helps to clarify and make things clear. Okay, so I'll summarize again. We give typically a projected return of 12 to 15%. It goes into the project. At the end of the project, once the project is completed, then funds are distributed. All right. How do currency fluctuations affect your investment? Now, this is a very, very important question, and we get this question a lot. So when you invest globally, when you invest cross-border, there's always going to be the issue of currency risk. Now, what we have done with the project owners is that the project owners have agreed to cover a certain portion of any depreciation of the rupiah to the Sing dollar at the end of the project if there is a depreciation, if the project is profitable. All right. So at the end of the project, when everything is done and everything is good and revenue is realized and profit is realized, then a calculation is done, and we look together with the project owner at the currency rate at that point in time compared to when you came in with your investment at the start of the campaign. Yeah. So I recap: if there is a depreciation of rupiah when it's converted back to Sing dollar before it's sent to you, then there will be a loss, and the developers cover typically up to 5% of that loss. Yeah. And in our experience in the past, it does not usually go above 5%. Sometimes the rupiah appreciates, sometimes the rupiah depreciates. It's very difficult to predict compared to the Sing dollar. And a 5% buffer is a good buffer. But if the depreciation does go down by more than 5%, let's say 7%, then that additional 2% will not be covered by the project owner. It will eat into your profits. Right? So that is the risk that you have to take. So similar to what I shared earlier about risk mitigation, we lower the risk as much as possible by working closely with the developer and coming up with a structure that helps you to mitigate the risk, but we cannot remove the risk entirely. And when you invest in the real world, there's always going to be real world risk. In this case, when you invest cross-border in different currencies, there's always going to be a currency risk. Yeah. However, most of it should be covered by the buffer. Yeah. Okay, on to the last question, and do ask any questions if you have. If you have anything to ask, please ask them so that I can get to it before the end of the session. Right? And I see a few here in the chat. Okay, but before that, let me answer this last question. What advice can you give to new investors? How can we choose the best investment? And what are Ethis's upcoming projects? All right. So I'll answer the last question first. As mentioned right at the beginning, but I can see more people joining in as time goes by. We will be launching our platform in Dubai and in Malaysia. Alhamdulillah, we've gotten licenses from the regulators in Malaysia, Indonesia, and Dubai. So in future, we'll have more countries for you to invest, for you to choose from. However, as I shared earlier as well, Indonesia will be our core market, and Indonesia has strong fundamentals. And I would say in many ways, Indonesia will still be the most attractive investment that will be available in the Ethis group, right? But what is different when we have other platforms is you can choose to diversify, you can choose to spread out your investment in different countries, right? Because geography risk is a real risk. Yeah. So my advice to new investors is to invest what you are comfortable with. Invest an amount that you are comfortable with. So it is a balance of investing too little or too much. If you invest too little, at the end of 1 year, you get your returns and your profit. Let's say you invest the minimum, right? And the profits you get at the end of the year from $500, you make, $40, $50, $60. And that's not something very motivating. It's not something that, of course, it's great as a percentage, but in absolute terms, it does not really give you a lot of cash in hand. So you have to balance not investing too little so that you feel the money that comes back to you, you feel the profits that comes back to you, and it makes a difference in your life, and then you can snowball it and invest again, right? But on the other hand, don't invest beyond your means. Yeah, don't invest beyond what you're comfortable with. So the rule of thumb is invest what you can afford to lose. That may sound quite fierce in the sense that it may sound quite extreme, but I think that's the best advice I can give. Right? Don't invest money that you're dependent on for your livelihood or for your children or for something. Right? Invest your excess cash. Right? And that is the advice that I can give to you. Excess cash needs to be invested so that you grow it, so that your money grows and works for you. Right? Second question, how can we choose the best investment? Now, I would say that most of the projects are quite similar in general. Yeah. So, of course, there are differentiating factors between the projects. So, you should look at the project owner. You should look at the stage of the project. Sometimes we have more significant developers who have better track record, who have done bigger projects. Uh, and sometimes we have more shorter term projects. So it really depends on what's available. And some investors choose to invest small amounts in many, many projects, right? However, depending on how much money you have allocated to Ethis, if the amount is not too large, then maybe you can decide to invest in 2 or 3 projects, not too many projects, because every time you do the transfers and so on, there is a cost involved. Yeah. So it's a balance between not investing too little, not investing too much, and investing frequently, but within the limits of what you or the amount that you want to invest. So if you are someone who has allocated, let's say $500,000, and you want to invest 50,000 in 10 projects, then that makes a lot of sense. But if you're investing $10,000 and you want to put 1,000 in 10 projects, then that may not make sense. You may prefer to invest 3,000 over 3 projects or 5,000 over 2 projects. All right. So yeah, that's the last question that I have for today. Let me take a look at the chat to see what other questions there are. All right. First question. What about worst case scenario when the collateral cannot be received? How is the risk shared between Ethis and investors? All right. So first, to be very clear, Ethis does not share in the risk of the project. Right? Our job is to match you with the project and then to receive updates and information from the project owner. That's the role of the platform. It's just like when you buy something online through an e-commerce platform. Let's say you buy something from Amazon or from Lazada or from Alibaba, and there's a defect in the product, right? There's a defect in the seller, or the seller doesn't give you your product. You cannot get the money back directly from Amazon or directly from the platform if the money has already been transferred or given to the seller. Right? The platform does not have that money anymore. So similar to us, we match you and we facilitate the process. We are not responsible in the project itself, in the outcome of the project, right? But at the same time, we are also, in a sense, in the same boat, because this affects the reputation and this affects the success rate, affects our business a lot. And thus, we always want to make sure that we find the best projects for you. There's another question here. The Candy investment to buy stock. Can you elaborate about the mechanism? I think this is, I assume, this is referring to Capital Boost, which is a different platform. Yeah, which is related to me as well. I have some interest in that platform, but Ethis is a separate platform and it's focused on property. We don't do trading of candy, as what the question is asked. How can I know that Ethis is a legal company? All right, so right now we have gotten not only legal company, obviously we're registered and so on, but we are also licensed by the financial regulator in Indonesia. And the license platform is being launched this week, inshallah. So you can go do a Google search, Ethis Indonesia P2P, and you can put in 3 acronyms OJK, which is the Financial Services Authority in Indonesia. Right? And you'll see a lot of media there, a lot of media coverage. Yeah, before this, we were operating out of Singapore. We are a registered company in Singapore, and there's no license for what we do in Singapore for Indonesian projects. Thus, right now, we have shifted the operations to a licensed entity in Indonesia, right? So I hope that answers that question. There's another question. What happens if a project incurs a loss? Now, in the unlikely event that there is a loss, then the investors have to bear the loss as well, right? However, as I said earlier, there are collaterals, right? And I guess the question here is, if the collateral is liquidated and there is still a loss, right? If the collateral is liquidated and there's still a loss for whatever reason beyond whatever was anticipated, then you will lose some of your money. Okay, I have to be very clear about that. But I would say that typically the risk is in the time, the risk is in the duration. When you invest in property, it's about how long you can afford to wait if something goes wrong, right? So there's the good, there's the benefit of investing in property. Another question, could you give me an example of returns? Yeah, so if you go to our platform, I think our upcoming project, I believe is giving 13 or 14% projected returns over a year. So if you invest $10,000 at the end of the year, there's 14% return. The project is completed. 40% return goes to you. So the $10,000 goes back to you. The 1,400 also goes back to you. But as I mentioned earlier, a small component, 12.5% of your profit goes to Ethis. Yeah, so out of 1,004, 12.5%, let's say it's $150 goes to Ethis, and you get back 1,250, right? So from a $10,000 investment, you get back 11,250. Of course, these are just rough figures, not exact calculations, but it's quite accurate already. All right. So yeah, I think we have reached the end of all the questions. Exactly on time, 9 p.m. I love to be on time. And if there are any other further questions, you can scan this QR code. You can chat on our platform with our team. You can WhatsApp our team members. I believe you're already in touch with most of them. We are always available. We're always around. We're always happy to take your questions and to speak to you and to help you make your investment in Indonesia. So do wait, do keep a lookout for our upcoming project. It'll be a very interesting project. It'll be a large project compared to what we've done in the past. Should be coming out Tuesday, maybe, or Wednesday. And the project is in a very, very good location by a reputable developer supported by the government. All right. Thank you, everybody, and Assalamu alaikum.